What's going on? Welcome back to the channel. So I wanted to play for you Rocket Lab's latest conference that they participated in, and that was the TD Cowen 46th Annual Aerospace and Defense Conference. So ultimately I'm going to go through this, and then at the end I'll go over some of the Cole's notes and things that you need to be aware of. Before I get into any of that, make sure you guys hit that thumbs up and subscribe. And then one final thing, I did launch a free Discord. Pop over there, take a look. A lot of good people, a lot of good chats for stocks, options, crypto, everything that you need to know. So definitely pop over there and take a look. And with that, let's get right to it.
While we're waiting, I'll go ahead and just get started real quickly. So I'm sure many people are familiar with Rocket Lab, and people really kind of associate us as a rocket company, given the, it's not a totally unforeseen conclusion given the name Rocket Lab. But what people don't appreciate is the fact that over 70% of our revenue is actually generated from non-launch related activity. So what we call our broader space systems business. And we view that as, we'll break down that in a little bit more detail, but essentially we have a launch business where today we have a small dedicated launcher called Electron that can put 300 kgs into low Earth orbit. It's the market leading solution for small dedicated launch. We, I believe as of earlier this week, had our 59th launch. So it's a very established vehicle. Sorry, I forgot the clicker back. Anyway, I think it's a different clicker than that one. It's a small dedicated launcher that really does provide a lot of value to our customers, very different than, for example, a rideshare or a large dedicated rocket. So it really serves a very unique purpose in the market. And again, we are by far and away the market leader in that segment. As many people are aware, we're developing a medium launcher called Neutron, and Neutron is targeted to be brought to the market later this year. Neutron will address what we think is a significant gap or opportunity in the market in the medium class launch where SpaceX and Falcon 9 really dominate that market. So it's a vehicle of delivering 13-ton to low Earth orbit. Great, thank you so much. To delivering 13-ton to low Earth orbit, if you compare that to a Falcon 9, which is around 16.5-ton to low Earth orbit, again, it kind of addresses that market, which if you think about the ecosystem and how constellation customers have developed their businesses and how they've architected their satellite solutions, it's really been all focused around vehicles that look a lot like a Falcon 9 or would look like a Falcon 9 or by default, the Falcon 9. So we think bringing Neutron to market when we are is an opportune time, given the fact that there's a lot of new constellations coming to market, not only in the commercial market, but also in the government side of the market as well. So we're very excited about bringing that product to market. So I mentioned that's the rocket piece that makes about 30% of our revenue. About 70% come from space systems, which is a combination of spacecraft where we sell merchant subsystems into the market. So think of things like solar panels, reaction wheels, star trackers, command and control software, other things that help other people make satellites. You can think of key customers there are people like Lockheed and Northrop and York and others. And then ultimately our goal is to be able to put our own assets on orbit. And we think our ability to design spacecraft, manufacture them at scale, launch them either on a small dedicated rocket or on a medium class rocket really allows us to do that in a very, very rapid and cost-effective way that'll give us a significant advantage in the market. So if you look at Rocket Lab at a glance, we're a much more diversified company, I think, than people would normally assume. We've grown very quickly. When I joined the company about 7 years ago, we had about 100 employees. Now we have over 2,000 employees spread across 5 US states, New Zealand, and Canada. We operate 3 launch pads today. We have 2 launch pads in New Zealand, and we have 1 in Wallops Island, Virginia for Electron. We're building a second pad at Wallops Island for Neutron, the larger vehicle. We have significant manufacturing operations to address both the rocket side of the business, which is kind of bifurcated between the US and New Zealand, and then our space systems business, which also manufactures products in Canada, US, and New Zealand as well. If you look at our global footprint, as I mentioned before, we operate on a pretty diverse basis. The company got started in New Zealand, and so we have a pretty significant presence there with around 800 of our roughly 2,200 employees located there. It's a significant, we think, a significant advantage for us. The cost of labor is quite a bit lower than you'd find in the US, particularly on the engineering side. It's a location that's scaled very quickly for us, and it's been a continued kind of strategic advantage for us. We then expanded through organic and inorganic means across the United States. We've acquired in Canada, and we've acquired 4 companies in the last several years. Right around the time that we came public, the first company we acquired was a company called Sinclair Interplanetary in Toronto that did reaction wheels and star trackers, or what was called attitude, direction, and control components. And that's been a very successful high-growth business for us. Then we acquired a software company called ASI that actually interfaced with those command and control components to orient satellites on orbit. Then we acquired a company called Planetary Systems Corporation that makes separation systems. So if you think about, you have a rocket, you put a spacecraft on the rocket, the separation system is basically what deploys the spacecraft from the rocket. So it's a very critical step in getting assets on orbit. So we acquired that, and those separation systems are used not only on our vehicles, but also on essentially almost every rocket that launches right now in the Western world uses our separation systems. And then lastly, we acquired a company called 𝗖𝗪𝗧𝗪, which gave us the capacity to make high volume, high quality space grade solar cells. And that's been kind of a default supplier into a lot of national security missions, something that needs high efficiency, high reliability, long life solar power generation comes from those solar cells. So again, it's a very diverse business across lots of different geographies and been growing very, very quickly. If you look at our customer roster, it's a very diverse roster as well. If you kind of look at the mix, it's about 50-50 commercial versus government, but then within government, it's split, again, relatively evenly between civil and defense. Now, I think it's a little bit, I mean, this is the factually correct kind of depiction of our customer base, but when you really think about and you peel that commercial level back, most of those commercial customers are also government dependent. So if you really look at our customers, it's probably more north of 80% that really have a strong kind of government-driven demand for the business, and that's really where we like it to be, because there's always been a lot of hope and dreams about commercial space. I think we're seeing a lot of those come to fruition now. But if we really believe you have to have that solid government background, because that's really what pays the bills. Historically, they haven't moved as fast, and maybe the growth hasn't been as sexy as people expect from a commercial ramp. But I think we're actually in a very unique time now, because things like the Defense Department's initiatives like SDA, so their proliferated low Earth orbit architecture, has really created a government hockey stick that we've never really seen before, and we're being able to take advantage of that through our space systems manufacturing business, but also ultimately through launch. We've already talked about some of this. So Electron is really it's a multifaceted vehicle in the fact that we can deliver payloads to orbit with Electron, but we also have a variant called HASTE. And HASTE is what's being used to support hypersonics test development programs for the government customers. Right now it's all US government customers, but ultimately we think there could be a bigger opportunity to work with other friendly nations in creating opportunities for HASTE platforms. And then I mentioned Neutron that will be coming to market later this year. If you look at the fact that we are the second most frequently launched vehicle behind SpaceX in the Western world. So again, having launched Electron now 59 times, it's a very established, proven vehicle. And really, if you think about, I get the question all the time is, well, why would somebody choose to go on Electron versus go on a SpaceX rideshare, for example? And when you look at that on kind of, they're hard to compare on really on an apples-to-apples basis, but you try to put them side by side, if they say, well, why would you pay, in some cases, 4 times more to be on Electron versus being on a SpaceX rideshare? And the answer is really the fact that if you need very unique orbital insertion requirements, you're not going to get that on a rideshare. So if you need to be, for example, at a 52-degree inclination with an LTAN of a certain time, you're not going to get that from a rideshare, because rideshares are like city buses. They have a defined route. They go to popular destinations. If you want to go to a bespoke destination, you really have to have a dedicated ride. And if you have a small satellite, you don't want to put a small satellite in a large, expensive rocket. You want to put it in the smallest rocket that you can. So that's really what defines and supports the small dedicated launch market. We own more infrastructure than most would imagine as well. We actually have our own privately owned and controlled launch range in New Zealand with tremendous access to launch on a very frequent basis. So we don't think launch access for Electron is ever really going to be a practical issue. We own 2 pads there, so we have resiliency and redundancy. And then we also have the pad at Wallops Island, Virginia, which is a NASA range, and so we work very closely with NASA. And again, we'll have a second range, second launch pad there for Neutron that's well advanced in its development. And so we'll be able to aggregate and amortize the cost of Wallops operations across 2 vehicles. So we're very excited about bringing that infrastructure into play very quickly. Neutron I talked about briefly. It really, again, we think addresses what we see as the monopoly today that SpaceX has in that medium launch category. It was kind of a monopoly that was created out of performance, because certainly, it's hard to knock SpaceX. They've done amazing things. And I think the commercial and government customers are certainly grateful that that capacity exists. But there are a lot of customers that would very much prefer not to put their spacecraft in the hands of an arch competitor. And so we think that's important, and also the fact that the U.S. government customer just needs diversity of supply. So we think Neutron is the right vehicle. It's really kind of a very modern vehicle compared to even the Falcon 9. When you look at the carbon composite materials for the tanks and structures and the engine architectures, we're really kind of bringing the latest and greatest to market embodied in Neutron. And you can see here that Rocket Lab always does very aggressive things, and bringing Neutron to market in the time scale and the cost that we're doing it is no different. Most rocket programs take close to a decade to develop. We're bringing this to market in a much shorter period of time, in a matter of 3 to 4 years. So when we came public in August of 2021, we were targeting the end of 2024. We've had a bit of a slip to that schedule, and we've communicated no earlier than the middle of this year. But again, when you look in the time scale and then add in the concept of how much more capital efficient we are in bringing that vehicle to market, it's really a combination of those things that we believe creates a tremendous amount of shareholder value. So again, Neutron, we've been able to now begin signing up customers. And I think the challenge with bringing a new rocket to market is the fact that it's a very, I would say almost a codependent dance that you do with your customer, because what you don't want to do as a satellite operator is commit to a vehicle that may not be ready when their satellites are ready, because time is money and they don't want to, they need to deploy their assets to start generating revenue. And the worst they can do is basically sign up and then wait for 2 years for the rocket to make it to the pad. Same thing on the rocket developer side. What you don't want to do is sign up sketchy customers or ones that you don't think are going to deliver their spacecraft on time. Because if you look at our history now of operating Electron across 59 launches, the launch delays that we experience are rarely, if ever, driven by the rocket. It's really almost always delivered by satellite delivery. And it's not like our satellite customers don't want to get their assets on orbit. They absolutely do, and they want to do that as quickly as possible. But the problem is, satellites are very complex machines. You build them, you put them in their test environment. Something can fail at the last minute in test. They got to take it out. They got to basically figure out what the issue was, remediate that issue, put it back in a test, requal. So it's not unusual to have delays in customers delivering their payloads to us. That said, I think it really highlights the importance of having kind of a mature business with a robust pipeline, because it does present opportunities to kind of shift things around. If one customer's late, you can grab another. But that's one of the reasons why the customer pays the premium that they do to be on Electron, is because of that flexibility. They know that if they're late by a month or 2 months or 2 weeks, that they're not going to get put to the back of the line and have to get rescheduled 12, 18 months later. So again, that's we see that there's a huge amount of advantage for our customers and our platform. Now, Space Systems, I'll talk about real quickly. Space Systems is probably the lesser known part of Rocket Lab, and again, but represents over 70% of our revenues. And you can think about the components that we and I talked about in some detail that came partially through acquisition, but we've also done a lot of organic development of capabilities that we bring to market. We also build full spacecraft solutions. So the first one that we did at scale was with Globalstar MDA. So we built the satellite buses for that program, and those are coming off the production line as we speak, and they'll be teed up for launch relatively soon. And then we followed that on with a large contract with the DoD to win a Tranche 2 beta award for the SDA program. And so we went from our first contract award of about $150 million to a second award, which is over $500 million. And we have a lot of other programs as well that are more kind of small bespoke programs, including 2 satellites that we manufactured last year that will ultimately orbit Mars to do some scientific research for NASA. Now, people would say, well, why are you building spacecraft for other people? And I would say that, look, there's clearly there's the financial kind of attributes of that. We're generating cash flow and just scaling up the business. But all the programs that we've elected to take on in our Space Systems group have all been about building our IP portfolio. Because as I mentioned earlier, the real strategy here is ultimately owning our own assets on orbit. So we really kind of go with what we call teaching customers, where we don't take a program that's not going to allow us to create new capabilities really at our customer's cost. So we think it's a capital effective and just a better way to do it than just kind of do a kind of a field of dreams approach. But we really work with the customer, develop technology, bring it to market, and now we own that technology. We can use it for our own benefit down the road. We have multiple variants of our satellite platforms. You can see we go from small satellites that launch on Electron to much larger ones that will launch on Neutron and that currently launch on other vehicles like the Falcon 9 and so forth. So we have a broad array of spacecraft. We're incredibly vertically integrated. If you look at a Rocket Lab spacecraft solution, it's probably 70%. If you look at the satellite bus, it's probably 70% internally manufactured with all the subsystems. And we think that's super important because if you don't have that vertical integration, you can't control cost and schedule, which typically are the boogeyman of space programs. But the one thing that we've currently stopped shy of, and we've talked about this before, about being kind of our next endeavor, is really the payload side. So what we've done is we've focused on all the key elements of the satellite bus, and then the next step will really be adding payload capabilities so that we can bring the full solution to the customer, but also bring the full solution to our own internal needs as well for our own application aspirations. Through our acquisitions and through our organic work, we've got a tremendous amount of space heritage, and those that have had exposure to this market understand that heritage is incredibly important. It's important, and it also kind of manifests itself in important financial ways, in the fact that it's not a market where people will make quick choices to save a few bucks on a key subsystem. So once you have that kind of heritage and legacy for a subsystem, customers don't want to risk a mission by trying to shave a few bucks here and there for a new entrant. So once you're in, it's usually a pretty stable, predictable business, and we've certainly seen that to be the case as we've grown that business over the last several years. If you look at our backlog, we exited last quarter with over $1 billion in backlog, and the backlog is pretty representative of the overall mix of the business. Recently it skewed a little bit more to the full systems build because of that large SDA contract that I mentioned earlier. But we still have a pretty, if you look at, it's roughly an 80-20 mix right now in the backlog between space systems and launch. That will start to morph and change a little bit, of course, as Neutron starts to become more dominant in the backlog and more dominant as it comes into scaling production. But we like that mix of, call it 2/3 to 3/4 of the business coming from space systems and roughly 1/4 to 1/3 coming from launch, because as I kind of mentioned earlier, launch can be a bit of an unpredictable, lumpy business where you recognize revenue at point in time when you launch the rocket. Whereas on the space system side, we have a lot of ship and bill from our components business, plus the larger spacecraft manufacturing programs. You're recognizing revenue as you're deploying resources and incurring cost against the program. So it's much more programmatic, and you can kind of model that and predict your revenue and your profits much more predictably. Really quickly, we've been able to exceed the $100 million revenue per quarter threshold. The guidance for the fourth quarter that we provided several months ago was a significant growth off of the most recent quarter. I'll jump to that real quickly. Was to be in the $125 to $135 million range. So again, the business is growing very rapidly, and it's a combination of growth in the launch business and growth in our space systems business. And I think if you look at the layering of our backlog that we've been able to put in place, that's really enabled that kind of steady climb up and to the right. But this is, we're still in the very early stages of developing this business, and I think volatility and I would say a little bit of lumpiness is just going to be the nature of what we do until kind of the ecosystem develops a little more fully, until our customers that are kind of get their businesses to the point where they're much more predictable and delivering a steady stream of spacecraft. But we're pretty pleased at how the business has developed. We've had steady expansion of our gross margins. I think the focus right now, of course, is our OpEx and our particularly R&D spend, because we're putting a tremendous amount of capital towards bringing Neutron to market as quickly as possible. So, not only myself, but of course investors are very focused on, when do we have that turning point? When do we turn into an EBITDA positive, cash flow positive business? And really that's totally dependent on Neutron, because that's really the only part of their business today that's really consuming capital, and it's consuming in a pretty major way. And it's understandable given the scale and scope of what that program is. But the beautiful thing about once you get kind of the rocket to the pad, you can take a pretty significant step down in R&D. You continue to invest in the vehicle as it matures, and you typically do several block upgrades before the vehicle gets largely frozen. from an R&D perspective, and that's when kind of the real margin expansion comes into focus. But once you get that first rocket to the pad, that's really where you can start to have a much more predictable kind of roll off of that heavy R&D and CapEx spend and getting the infrastructure in place. I think with that.
Awesome.
Yeah.
Yeah. Well, thanks, Adam. Definitely want to hit on space systems a lot. And also, you guys haven't reported Q4 yet, so I don't want to get ahead of anything. But it looks like launch cadence was pretty good in Q4. I think you guys came in at 16 launches. It was down a little bit from your initial expectations at the start of the year, and you did talk about some of the customer readiness and lumpiness. But maybe just to start off at a high level, just talking about the economics of launch. It's not unattractive, right? So maybe just talk about like the progress billings and the cash cycle, the underlying economics to start off with.
Yeah. So look, the launch business it's a very high fixed cost business, right? You have launch ranges to maintain. You've got a lot of testing facilities to test your engines and so forth. So the profitability of that business is really, really dependent upon cadence. As you mentioned, we've grown the business quite nicely. In 2024, we went from 10 launches in 23 to 16 in 24, so that's a pretty nice growth rate year on year. But we came into the year with 22 launches on the manifest, and we delivered 16. The delta between the 16 and the 22, again, was all customer readiness. So that's the one thing that we really can't control at this point. And so what we do is we just look to continue to build the backlog, and hopefully we get to a point where you've got satellites sitting on the shelf waiting to go, and when one customer slips, since we own our own range in New Zealand, we can kind of just swap that in and out. So we've got ability to compensate for customer lumpiness, but it's going to take a little bit more kind of, I would say, ecosystem development for that to really be the case. Because again, a lot of our customers are new, like they're new themselves, right? So it's difficult for them to really kind of have the confidence in delivering things on schedule. Now, our margin model for that business is, we think that Electron can be when we're launching twice a month, and we're not quite at that rate yet, but based on, again, 10 to 16 to a number this year that hopefully looks like something north of 20 launches per year, you start to get that in focus where you get to be in the 40 to 45% gross margin range. Very little R&D, if any, really for Electron at this point. So you can kind of imagine it gets to be a pretty nice kind of contribution margin looking business. Neutron's going to take a few years to get there because it's just at its beginning of that process. But also, Neutron's quite different in the fact that it was designed from day one to be a reusable launch vehicle versus Electron, that we've been backing our way into reusability. So I would say that the end result is we think that Neutron can be a 50%-ish gross margin business and have a lot of the same characteristics as Electron. And again, this is not a let's see what happens. I mean, again, we've launched 59 times. We've got a lot of infrastructure. We understand, what it costs to bring a rocket program and maintain that rocket program. So we think pushing 50 points of margin, mid-20s to upper 20s contribution margin for those, I think is probably the right way to think about it. But it'll take a few years for Neutron to get there. But we're pretty close to getting there with Electron as it is.
Got it. And excuse me. And just looking forward, you have Neutron coming up here, hopefully mid-25. How we think about the cadence and ultimate split between Electron and Neutron at steady state?
The market opportunity for those vehicles are quite different, right? So if you think about, Neutron is really developed as a constellation deployer, and Electron was really developed as more of a bespoke mission support where you're testing new technologies out in orbit. We kind of call them like Pathfinder type of technology missions. Although there are some constellations that can deploy their constellations in their totality in a small launch vehicle, particularly the Earth observation market is a pretty good market for that. And we've got a lot of customers across the Earth observation market that use us for that. But really, if you think about the scale opportunity for Neutron, it's really, we don't plan on doing ride shares like a transporter. We don't think that's the right approach for this vehicle. It's really going after large constellations that, we don't want to kind of speak names at this point because it's a little bit too early. Other than the fact that, there's the government NSSL program opportunities. There's government launch opportunities outside of NSSL, like with NASA. Of course, ultimately, we hope that, the satellites that we're building for SDA will ultimately launch on Neutron. So we think the market opportunities are similar, and we think that, I think if you look out in time and you kind of lay a neutron and an electron a kind of scaling history, they're going to look very similar. You could probably lay them over top of each other pretty easily.
Got it. And on Neutron, because it's very topical, what should we be looking for, I guess, going forward? What needs to happen for you guys to hold that mid-25, and maybe any updates on demand? I'm sure demand is still strong, but how should we think about maybe future bookings that you got in Q3, and maybe talk about that?
Yeah, look, I'll save some of that for the earnings call, but I would say that the demand environment stays very, very strong. I think Pete and I have said before that we worry about a lot of things running a rocket company, but demand is not one of them, right? So we think there's healthy demand for that. It's all about bringing the vehicle to market, and bringing a rocket to market is a very, very. I wasn't around for when we brought Electron to market. I joined after the first test launch back in 20. The first test launch was late 2017. I joined in 2018. But watching it and kind of being involved from a greenfield, it's absolutely astonishing what it takes to bring a program like that together. So we do incredibly ambitious things. We've got ambitious targets. I think we've made steady progress. I think people can see almost on a daily basis the infrastructure coming together at Wallops, for example, which kind of gives an indication where we're ready on that kind of work stream, because people fly over, take pictures, and so forth. And I think we provide pretty steady updates on where we are with propulsion testing and so forth. So it's again, it's we like to say it's a rocket program. It's very difficult. If you look at, for example, like New Glenn that launched maybe a month ago for the first time. That was supposed to launch in 2020. Yeah. So it's not uncommon for rocket programs to have lengthy delays. I think, but fortunately, Rocket Lab's got an execution track record where we don't experience those kinds of things, and I think we think we're positioned well to get Neutron to the pad in a timely manner.
Got it. Yeah. And just on that, and before turning to space systems here, and then we can open it up for Q&A at some point too. But just the R&D profile, I think you hit on it of Neutron, where that curve goes. I think it's, what was it, $300 million in R&D, and maybe when we get over that curve and possibly to EBITDA break even. Yeah, so again, when we came public, we said that it was going to be a $250 to $300 million program. Now, that was, and then, by the way, that's to put the first rocket on the pad. That was never a number that was supposed to embody the cost to scale production and ramp and so forth. And we're still very much in that ballpark of call it the $300 million. Right now, it's looking a little bit north of $300 million to bring that first vehicle to the pad. Now, once you've done that, you had to put minimum viable infrastructure in place too. So you've got, it feels like once you get the first test launch off, you're kind of at 80% of where you need to be from an infrastructure perspective, absent the demand signal from the market saying, hey, you guys underestimate demand, you need to scale up faster and in a more meaningful way. In which case you might have to put more plant infrastructure in place and and maybe more pads and so forth. But right now, given the way that we've kind of planned the business, we think everything is pretty much kind of come to cost and schedule. And if you look at we're across CapEx and R&D for Neutron in 2024, we're kind of spending, I'd say, upwards of $40 million a quarter towards that effort. Right, and you're gonna continue to see, and we've talked about this, increased spend on Neutron until we get that first launch off. Right, so that's the timing of that is really important. But ultimately, the cost of the program is relatively constrained. You spend a similar amount of money, just to be spread over, whether it's spread over kind of 12 quarters or 16 quarters or 20 quarters. It really does depend on the timing, because a lot of cost is prototyping, and the prototyping cost really isn't affected by time. It's just sometimes your vendors are late in delivering or they're on time. So it's difficult in some ways to predict the exact timing of when all those expenses hit, but in their totality, it's pretty predictable. Got it. And just on pricing, I think Peter's been very vocal about waiting until pricing matures. Like how confident are you today on pricing and I guess also on Electron too? Just talk broadly about the pricing environment. Yeah, I think the reason why we're so, I'd say, consistent in our belief of not discounting is because this business is a really difficult one to execute in.
And what you found across the landscape is a lack of execution in general. So competitors can put crazy pricing like we've seen in the past. Some of those competitors are no longer around. And once that shadow kind of pricing lifts because people realize, well, oh, yeah, you can put anything you want on a slide, but actually to deliver a rocket to a pad on a consistent basis that doesn't blow up every time, it's a different thing. And so we've actually seen pricing increase. So if you look, when we started marketing Electron, it was a $4.9 million price tag. And now if you look at our price backlog, it's about $8.3 million. So we've seen a pretty steady increase in the pricing of the vehicle. Neutron, we don't think is going to be any different. We really don't see any, what we consider competition that concerns us on pricing for the medium class market. Because today, again, you've got Falcon 9. We've seen Falcon 9 pricing increases, right? If you look at how we've priced the vehicle, yeah, you can take an easy metric like cost per kilo, which is really kind of a lazy metric and not a very good one because price per kilo assumes that you're selling a completely full rocket, right? And many times, especially if you look at a Falcon 9 launch, for example, that isn't a Starlink launch, they're rarely full, right? And so it's all about what does it cost for a dedicated vehicle that's going to take your payload where you need to be. And if that requires, let's say, 10 ton of capacity, well, a Neutron will be able to deliver 10 tons as easily as a Falcon 9 can deliver 10 tons. So the whole pricing of, right now we've said pricing of Neutron of 50 to 55 million, that just kind of pegs on a price per kilo of a full Falcon 9, because they can do 16.5 ton, and they sell that for roughly $67 million. I think a little bit upward bias to that pricing. And kind of the latest that we've seen is that Falcon 9 at that pricing has been delivering about 70 points of gross margin. So we don't think this is a margin constrained, really kind of dog eat dog market at this point, because again, ultimately, very few people will show up with a working rocket in that class. And we think that, between ourselves and SpaceX, there's plenty of business to go after. And if there are other entrants that attempt to enter the market, it's probably big enough for them as well, but also they just have to deliver. And again, not many people have.
Got it. Thank you. Are there any questions in the audience? I've got a few more. Yeah.
So will you talk about any trends you see within your defense-related sales, and especially to our allies and partners?
Yeah, so we launch for a lot of international customers today on Electron. You see launches from companies like Synspective, which is a Japanese SAR company. We launched recently for 𝗖𝗓𝗡𝗘𝗖𝗧, which is a French Earth observation remote sensing company. So I would say that those are really kind of more, they fall in that commercial customer category that really, again, when you peel that onion back, it's government, but it's foreign government. So I would say that we see that to be strong. I think probably one of the strongest growing parts of our business is actually the HASTE variant of Electron that I showed earlier, which is doing hypersonics test development work for the DoD. And that will continue to be a big growth driver, we think, for our Electron business going forward. So we see really nothing but strength. And people ask us the question, well, are you concerned about, kind of the potential DOGE effect of, the new administration going through the Defense Department? We actually think that bodes well for us because, we're not that traditional stodgy prime contractor cost plus. I mean, we go in with aggressive firm fixed price, opportunities that really bring a lot of value to the government customer, and we move very, very quickly. So I think if anything, I think the heightened focus on efficiency and affordability and so forth, I think just plays to our strengths. So I think the trends have been all very, very positive. I mean, I was at a conference a few months ago where people were complaining about the government customer and how slow they move and how complex they are. It's like, I've not found that to be the case compared. We actually find them to be, in a lot of ways, easier and preferred to deal with than commercial customers.
And I guess off of that, that whole kind of thinking around the government and moving to your space systems business, the SDA Tranche 2, it seems like the government is getting a little bit more aggressive with going away from maybe traditional primes. And if you kind of look at the growth trajectory of LEO, it seems like it's got a lot of legs. So maybe just talk through Tranche 2 specifically, but going forward on other tranches, maybe the growth opportunity there.
Yeah, this is kind of one of those unique opportunities where the government has gone from being kind of the slow, predictable, stodgy, part of your customer base to really representing one of the stronger hockey sticks. And I think the SDA has presented an opportunity for small players to establish themselves. Whereas, it's not, even though you do see the Lockheeds, you see Northrop and so forth in those programs, you see people like York, you see people like ourselves, you saw people like 𝗖𝗧𝗧, which now got bought by Lockheed, you see Sierra Space and so forth. So I think it does represent a huge growth opportunity for the non-traditional, kind of players there. Now, I think that's come with its own, challenges, right? There's been some supply chain challenges. If you go back, a year and a half ago, the big, challenge in that market was electric propulsion, right? And that problem seems to largely been solved, and then that problem moved into optical terminals, right? So the optical terminals now are the problem. So I think it's just part of the growing pains of introducing kind of younger companies and newer technologies into a market that traditionally moves pretty slowly, and the customer, in this case the government, is trying to move very, very quickly. But overall, I think when we step back, I think it seems to be a great opportunity. We're excited about Tranche 3. I mean, we're going to be throwing our hat in the ring in a very, very aggressive way for that as well. So we think it's a very, very attractive long-term growth opportunity for us and hopefully a lot of other smaller players in the market.
Got it. And remind us when Tranche 3, is that an RFP later this year?
Yeah.
Okay.
So you should start to see indications. I think the award dates are going to be sometime in late Q2 or early Q3.
Got it. Okay. So just in the interest of time, I've got 2 minutes here. Just turning to the strategy, right? You guys have morphed from dedicated launch to this big space systems business. I guess where do you see the business in 5-10 years from now?
Well, I think love him or hate him, I think Elon has kind of shown us the model that kind of works, right? Which is an end-to-end vertically integrated space company. We think the life as a launch-only company is probably not the most hospitable place to be, just because it's lumpy and it takes a lot of capex, and it has its challenges. And we think that you don't want to be a metal bender, kind of satellite manufacturer. You really want to be an end-to-end player that can bring everything together. You got to do it in a very vertically integrated way, because you don't want to deal with what has historically been lower margin, kind of, contract manufacturing-ish type of profile on the satellite side of things. And you want to be able to control your destiny. In order to do that, again, you have to have all the various pieces of that overall kind of satellite system. But to us, that just paves the way to owning your own assets in orbit. That's that larger, much larger recurring revenue opportunity. And if you have a rocket, and you have the ability to design and build spacecraft and operate them on orbit, you've got all the pieces that you need. Now, you still may not, there's other elements you need to pull together, like spectrum in some cases, right? If you're doing a comms platform, you need to have those end customer relationships, even if you're like a remote sensing customer. So this is one where we think ultimately it's probably going to be a combination of organic and partnerships and acquisitions that get us there. But if you're a satellite constellation operator 5 or 10 years from now, and you're trying to compete with vertically integrated customers that have their own launch and satellite manufacturing capability and so forth, it's going to be a pretty daunting place to be. I mean, if you kind of think of how some of those traditional satellite operators today are thinking and feeling, looking at Starlink and looking at SpaceX as their competitor, I'm not sure they know what their next move is, because they're getting outdistanced on the ability to put assets on orbit really, really quickly at a very, very reduced cost point. So I think that, we think you have to have that full solution. And so that's where 5 years from now, I think you're going to see Rocket Lab, you're going to see, Electron still launching and growing. You're going to see a healthy merchant business that feeds off of the overall growth in the ecosystem and kind of that rising tide raising all ships. But then you're also going to see us with our own assets and owning applications that that are going to be advantaged by the fact that we can put satellites up very, very quickly and very cost effectively with Neutron.
Great. Looking forward to it. Well, we're out of time, but thank you so much, Adam, for supporting us here.
Thanks for having me. Yeah, thanks for having me. Appreciate it.